All right, here we are again, another episode of Kanata on the Rocks. I'm your host, Fadi Kuder. If you like what you see, don't forget to hit that subscribe button. And today we are joined by my bromance, Mr. Eric Ender.
This is
I've
me.
known Eric for, what, a couple of years now?
Oh, yeah, a couple of years, yeah.
So, Eric, how you been?
Phenomenal. You know, business has been all over the place this year, but that's what makes it exciting.
So, I just wanted to kind of let the audience know about you a little bit, about your business. Take us a little bit back. Tell us a little bit more about your business, what you do, why you do it.
Yeah, no,
Give
for
us
sure.
that sort of, 10,000-foot overview.
Yeah, for sure. Well, before I hopped into the mortgage business, I was a financial advisor for 6 years or so at one of the largest financial planning firms in Canada. And so that's where through that lens, I realized that there's such a huge need in the mortgage space for honest advice and guidance and support throughout that process and thereafter. So I felt that my skills could be better utilized in the mortgage space. And so I made that transition, haven't looked back since. I've only received positive feedback because of the approach that I take with my clients, as you well see with the clients that we work together with. Yeah. So just
you don't actually get the negative feedback. I get the negative feedback. Well, the thing is with Eric, it's a love-hate relationship. It's either they love you or they hate you.
Yeah.
But if they hate you, it's because they don't get along with the fact that you're telling the truth.
That's right.
And
exactly.
At that point, I actually drop them as clients too.
Yeah.
Because if they're lying to you, they're most likely gonna be lying to me as well.
Very much so, right?
Exactly.
And it's the same with me. If I'm working with a client and they're just like, and they're very set in their mindset, you just can't work with those people if they're not open to a different perspective and things like that, right? Because at the end of the day, you and I are professionals and we provide advice and all that. If someone's not willing to take that advice and implement it, then what's the point of working with us?
Exactly.
You can find discount websites and all that for those type of people, right? So...
And that's the thing too, like when you think about it, like mortgage is a heavy thing, right? Like you're just about to mortgage or about to finance the biggest asset of your life.
Correct.
Why would you want to leave it up to chance to do it on some random, whatever we want to say, website?
Mind-blowing, right? Like it just doesn't really make sense. So people are focused on, for example, rate, because that's something that everybody kind of understands through like credit cards, through car loans and things like that. However, when it comes to mortgages, it's just amplified because the mortgage amount is so large. So when you think of amortization, people don't really understand what amortization is. And they don't understand that when you set up a new amortization over a 25-year period, most of the interest is paid on the front end. And so when you kind of explain that and look through the numbers and all that, and actually that does make sense. So you come up with strategies, if it's their goal to pay it down quicker, you come up with different strategies that provide value to them. And that's where it helps to have someone who understands the math behind things and, to guide them in the right direction.
And the biggest thing for me, like when I'm referring them to you or to any other mortgage or banker or what have you, it's I'm always saying, like, check out the T's and C's.
Yes.
And they're always like, what are the T's and C's? Well, terms and conditions. But those are really what sets you apart from one mortgage company to the next to the next. You can have 7 different mortgage companies. They all have the same rate.
Yeah.
But when it comes to the terms and conditions is really where they get you.
Oh, yes. Even in terms of, like, prepayment privileges, what you can and cannot do. Some are very restricted. They'll give you that lowest rate in the industry, but it's so restrictive that if, life throws you a curveball or your life turns a different direction, you can't make that change because you're kind of clamped down in that specific. So I don't like setting my clients up with those really restrictive mortgages as a result because, like I've told my clients forever and a day, life is never linear. There's always, the ebbs and flows of life. So you want to make sure that you're able to be as flexible as possible.
I think on that note, actually, one of my clients flat out told me, hey, look, man, I live on a very, very limited budget. I want a mortgage. I want to do all of that. But is there a way I can have a mortgage that gives me at least one payment a year that I can just forego? And I was like, there is.
Yeah.
You just got to figure out which one works for you. And that's the thing. Sometimes it's not the rate. People keep just hammering it down. It's not the rate. You got to look at all other aspects of the mortgage.
Correct.
what does it look like for you? And it's for you is different than Joe. It's different than Jim. It's different than Jill.
100%.
Everyone is going to have a different situation.
That's it.
And everyone's going to have different needs.
Yes.
And for those needs, you need to be able to kind of be flexible. With that being said, tell us a little bit more about some of the offerings that you guys have. And when I'm saying that, I'm not talking specifically about the mortgages, but about the flexibility and the different avenues of finance you have.
Absolutely. Just like you said, I mean, it's not every lender that's cut the same way, right? They all have whatever. Rates are one thing, but that's only a small sliver of the overall pie. Some lenders offer higher prepayment privileges. Like the industry standard is like 15% lump sum, 15% increased mortgage payment. Some have 20%. Some have 10%, aka RBC, which is the lowest in the industry, but nobody knows that.
Mm-hmm.
You know, or there are some intricacies that one lender has over another. Like, again, I'll pick at RBC because I think they're the worst lender in all of Canada. But basically what happens is that if you want to change your mortgage frequency, so you're going from monthly, you want to go to biweekly, for example, and you want to pay down your mortgage quicker. Well, RBC will actually slightly increase the mortgage interest if you go biweekly versus monthly. And that's not in the client's best interest. And 100% of the time, the RBC rep at the bank, they have no idea that it even exists. Mm-hmm. So stuff like that we know, because we only deal with mortgages, all of the mortgage agents across the country, we communicate, we're on Facebook groups, we find this information and we kind of spread it out so that everybody knows that one lender is not equal to another. They all have their little intricacies, so it's finding the right match. And just like what you said, if someone has maybe variable income, or maybe they have they want additional flexibilities to say, you know what, I want a payment vacation because I'm getting into a very dead season in my business, and I want to make sure that the lender's on board with that. There are certain lenders that do offer that. Mm-hmm. And we're talking about traditional lenders, not B lenders, not private lenders, just traditional lenders. And so those are flexibilities that not many people speak of, but they do exist.
Yeah. It's really like, when you think about it, just like any relationship, right? Like, it's not about just the looks and the way they talk. It's a well-rounded sort of relationship, right? Like, for example, does this work for me? No. Well, does this work for me? Yes. And like, you got to check like different aspects of that relationship. Correct. And the same with the bank or the lender. You got to check different aspects of it and see, this works for me, this works for me, this doesn't, but it's not a big deal. This one does, but it's actually a deal breaker.
That's right.
Let's go back again to the next one, and so on and so forth. And the beauty about it is the people that we send over to you, they don't have to do that.
That's it.
They just have to be honest with you and tell you what their situations are.
Exactly.
And you can do that. With that being said, we did start talking about your business, but how long you been in business?
I've been in the mortgage business, you're saying? Mm-hmm. Yeah, I've been in the mortgage business for about 4 years now. So that's since I transitioned into this role. So over that 4-year period, I've seen a whole bunch of different scenarios, most recently the pandemic situation. And that in itself, you learn a lot very quick, right?
A lot of files.
Oh, boy.
A lot of pre-approvals, full approvals before they get there.
No conditions. Like, you see gong show after gong show, and you learn a lot very quick.
You know what? I want to kind of just, I'm glad that you brought this up. Mm-hmm. The way I wanted to kind of describe it, that period of the economy that we had specifically for purchasing homes and what have you, for buyers that I was dealing with, it's literally like going to bed on a cold night without a blanket. Mm. You have no idea what's going to happen, if it's going to be a warm night, if the AC is going to, the furnace is going to go down, or things are going to hit like, you just don't know.
You have zero idea.
You go in blind, put that offer in, and good luck.
And fingers crossed, too.
Yeah.
Way above asking and hoping for the best. It was,
How do you find that sort of affected the backflow, like right now, the situation it is right now? How do you see that 2 years ago or the year and a half ago so affected your business today?
Well, that's a very good question. So what I'm dealing with right now, it's not so much that, in Canada, there's a mindset of, I'll completely disregard all my discretionary spending and I'll make sure my mortgage gets paid on time every single month. That's what the focus is always for Canadians. It always want to make sure the mortgage is paid first. Yeah. Everything else comes second. Okay. That said, I've been dealing with a lot of, financial advisors that send me clients that are just saying, hey, Eric, I'm coming to maturity and I'm going to be renewing my mortgage at double or triple the rate. I can't afford those payments. What can you do? So we look at refinancing over, whether it be 25 or 30-year amortizations, different payment options. So I'm seeing a lot of that. Just from a monthly cash flow standpoint. Forget about like how much interest is paid. Forget about all that stuff. It's just, what is my monthly nut and does it make sense in my situation?
Yeah.
I'm seeing a lot of that. I'm seeing a lot of folks that are considering selling their own rental properties just to ensure that they're cash flowing on other rental properties, or that themselves, they can keep the roof over their own heads. So I'm seeing a lot of like mom and pop investors considering selling their rental properties as a result of just negative cash flow and just the overall situation. So I'm not sure if that's what you're seeing with your clients as well.
It has been sort of like the norm lately. Like, and the good thing is a lot of the people that we're dealing with, first thing that they put their hand up, hey, I'm looking to sell, and we look into the situation a little bit. You got to have a heart. At the end of the day, it's not like, yes, I want to take that sale, I want to put it up on the market. Obviously, I'm going to get like 4 or 5 other buyers out of it. Completely selfish.
Yeah.
Instead, we'll go, okay, well, what's the situation? What's happening? Let me just talk to Eric. Let me talk to some other mortgage broker, see what's going on. What can we do? And if there is a way we can maybe stretch that payment plan, like you said, or whichever way to keep you in that home, why not?
Yeah.
It's not always about just you.
Yes.
It's got to be about the client first. And if it's always about the client first, guess what? Those people come back and they refer you other people.
Correct. You have to be able to sleep at night.
I think I had one of those. I sent them over to you. You did the refinancing. I was going to actually sell their home, but I sent them to you. You did the refinancing, and they just referred me someone else.
There you go.
It happens.
Yep.
You have to be 100% blunt and honest with people. And sometimes, like I said, they might not like it, but hey, man, it's the truth.
It's in their best interest.
It's the truth.
Yeah.
With that being said, talk to me about some of the most interesting files you've ever worked on. And it doesn't have to be names. I don't need to know sort of nitty-gritty, but just,
here. I think the most interesting ones, and I guess that goes for this year in particular, because of all the rule changes, but a lot of these situations with the individuals that are on work permits or non-permanent residents, those are the most interesting ones, because there's kind of like little loopholes here and there. And, I speak to lawyers very often, real estate lawyers, and they tell me yes or no, depending on the situation. There's been recent developments where there's kind of like exceptions that can be made depending on the situation. So I'm working on one right now where they've been accepted for a nominee program. And so if they're accepted as a nominee, then they can purchase a property. There may not be any surtax involved, because there's always a surtax of 25% for the purchase price that they have to pay. They might be exempt from that. And so then they're still on work permits.
Yep.
So that's always an option. And it's really tricky because those rules can change at any given point.
It's kind of funny because like it's not a massive percentage of purchasers or home buyers, if you will. It's only, I think, 2 or 3%.
Yeah.
But I've been getting a ton of those because that's what I focus on. Most of my focus is on the immigrants and, people new to the country and all of that.
Yeah.
And they're always coming to you. They're like, oh, we just wanted 25% tax. And it's like a boom. Sorry, it's just not going to happen, buddy.
That's it.
You're going to have to wait another year or two until that ban is off. Or in that situation, maybe you have your permanent residency and then we go from there.
That's right. Yeah. The PR is always a safer route to take, right? But sometimes it just takes so long before that happens, and it's unfortunate.
So, Eric, for someone that's never, ever looked into purchasing a home or talked to a mortgage broker or what have you, what would you tell them? How would you kind of set them up on the right track in like 2 minutes?
In what regard?
What to do to prepare themselves?
Okay, yeah, no, that's fair. So for anyone that's a first-time home buyer that wants to get into the market, work with someone like yourself, a qualified realtor like Fatty, or someone like myself who's a qualified mortgage broker, to just get that advice, just get that guidance to get to the point where you're willing to purchase a property and you're confident in doing so.
Yeah.
Right? Because you need a real estate team backing you to make that very educated decision that you're going both feet in to the largest asset that you'll ever own, very likely.
100%. And this is one of the reasons why I totally refuse working with anyone without sitting down first.
Yeah.
Giving them what I call a buyer presentation, and then just kind of explain to them the buying process from A to Z.
Yeah.
And what do they need to do in that in that time frame to get there. When you said the real estate team, I really appreciate that you brought that up as well too, because it's not just me, it's not just you. You've got also the inspectors, you've got the lawyers, you've got the
appraisers,
the appraisals. Sometimes you might have a construction worker coming in as well too, tradesperson, to give them, a bit of an opinion on what's going on.
Yeah.
Sometimes you might need an engineer, structural engineers, because they want to change stuff. The multiple different cooks in the kitchen, but they're all working. We're the sous chef. I guess you can call us the main chef, and then everybody else is just kind of working with us to prepare that meal for them, to make it work.
That's right.
With that being said, it's kind of heart-wrenching sometimes when someone just like, oh, I'm just going to go buy. Well, you don't have a pre-approval, you don't have this. So you have to kind of dial it back a little bit and say, look, no, we got to start from the beginning.
Yes.
We got to explain to you what the buying process looks like. If you want to work with me after,
right? Yeah.
Exactly. If you want to work with me after, great. If you don't, at least I've given you that.
Correct.
And you're set. You're on your way.
Correct. Exactly. And that goes like even for myself. And it's great that you have that buyer's presentation that you provide them, and so they understand A to B to C, right? For myself, I do something very similar. I hop on a discovery call with them. So I ask them, what's your perspective on things? Like, what do you hope to achieve?
Mm-hmm.
What's your time frame? Very essential information. And then from there, understand where their perspectives are in purchasing a property. I also have an intro video that I send, so that gives them the time to watch it for the call, so that they know what to expect working with someone like myself, and so on and so forth, especially for first-time home buyers. They don't know.
Absolutely. I tell the people all the time, actually, I'm like, listen, Eric is very, very professional. He's going to send you a list of things that you need. Before you hop on that call, jump on that video. It's only like 4 minutes.
Yeah.
If you don't have the time for it, then just don't jump on the call.
There's no point.
If you don't have 4 minutes to at least understand what's going to happen in that call, then the call itself is going to be a waste of time. You're going to have to redo that call. And then really, when you're thinking about it, again, you're talking about the biggest asset of your life.
Correct.
Why are you going to shortchange yourself?
This is it. Right? This is it.
And then now, more important than ever, because of the new rules coming in as well, too, even for us.
Yeah.
As of December 1st, we have the new TRESA coming in versus the old rules that we had.
Correct.
And you're going to get a lot of people that are, the whole self-representation is going to be a thing that it's going to be very, very difficult for them, especially when it comes, like they're going to be basically left out without a blanket. You know what I mean? Sure, yeah, you want to work with our realtor, go right ahead. But here are the rules. Here are the things that you should be looking out for. And we actually have to now let them know what those things are, which is fantastic, because I've never, ever worked with anybody without a buyer representation.
Right.
I don't do that.
Right.
For me, it's like, look, if I'm going to work with you, I'm going to be representing you 100%. And the same goes to you. If you're not going to be able to represent them 100%, then I don't want that.
You need that commitment, right?
It's a commitment both ways. It's actually more of a commitment on my part than it is a commitment on their part, because it puts me in a legal situation as well, too, where I have to step up.
Fiduciary duty, right?
100%.
Yes. Yeah.
And that fiduciary duty is basically saying, look, Mr. Client, you have the right to sue me if I don't do my job properly.
That's right.
So, of course, I'm going to do my job properly.
Yeah, of course. It's in your best interest. You're representing your own brand. You want to maintain that quality of service, right? So that document further solidifies that relationship between you and your client, right?
Exactly.
Yeah.
So some of the preparation work that goes into putting a file together, could you share that with the audience a little bit, just to kind of explain, like if you're self-employed or, a couple of situations maybe?
Yeah, for sure. So typical, whether they be teachers or government workers, things like that. If they earn a salary, it's very, very basic income. It's basically it's a letter of employment, a pay stub, sometimes last year's T4, and we might need a down payment history. So that's usually 90 days that we would need that. And I get most of the questions on what is a 90-day down payment. So it's basically tracking where your down payment's coming from over a 90-day period. So it could be multiple accounts.
Why is that important?
Well, because compliance and regulation. We want to know where that money is coming from. Is there, it's anti-money laundering and things like that. So
it's the whole FinTrack.
It's correct.
That's
exactly. Yeah.
If you can't track that money, sorry, you can't buy with it.
Yeah.
Simple as that.
It's kind of frustrating at times because it's supposed to be the banking institutions, their obligation to do all of that, but we have to do a second check of that. So if your money's sitting at a big bank over 90 days, they should have done that. Right,
100%.
But we still have to do that in order.
But we all know at the end of the day, like the big banks are going to throw it on you anyways. It's up to you to provide to us the proof that this money is not coming from any sort of shenanigans.
Yeah, doesn't matter which lender, it's always the same process. Yeah.
Perfect. So the down payment, we've got the the salary, the income.
Yeah, and then the debts. So once we pull credit bureaus, that's when we have a list of all the debts. We know which debts are, and that's the kind of conversation where it depends on what the credit score comes out as, depends on the debts involved. Sometimes it makes sense to pay off a debt, sometimes it doesn't, especially when it comes to auto loans. So for refinancing or even purchasing, some auto loans are so, you might have 0% interest or 2% interest. We don't want to pay that off because the mortgage interest rate is higher. So it's like, does it really make sense? So.
But sometimes it's gonna be holding you back.
Correct.
Especially if it's like a $600-700 payment. I mean, that's a significant chunk out of your salary every month that's going towards that, which is gonna take away your affordability. It's gonna bring it down.
And we focus on not the debt balance, but the actual payment to that debt. So you can have $100,000 worth of a balance, but what's that payment look like? That's what affects the pre-approval.
Yeah.
So
it's your monthly obligations after all. So basically, if you got A, B, and C payment, A plus B plus C equals whatever, and if that is equal a certain number, that number, whatever that percentage is, if the rest of it can't suffice the mortgage, well, guess what? There's no mortgage.
That's right. Exactly.
Simple as that. Yep. You might at that point look at maybe having a co-signer or somebody that is willing to go on both title and mortgage with you. And that's an obligation.
Yep, definitely. And sometimes what I tell my clients, especially when I have student loans, for example, so a strategy we implement is, what is their payment to that student loan? Is it a principal plus interest or just interest? Obviously, in that situation, if we have interest only that they're paying on the student loan, that helps the application. It helps us get a higher pre-approval if that's the case.
Yeah.
After the fact, after you buy the house, you can go back to paying principal, but just for the mortgage application, lowest payment possible.
Exactly. And it's always actually, like, that's interesting that you brought that up. It's something that I always tell people, even with the mortgage, go with the lowest payment possible that you can, because you never know when that rainy day is going to hit.
That's it.
Right? If you do want to double it up and triple it and do whatever you got to do, as long as it's within the terms and conditions, Bob is your uncle. Do it. Go right ahead. Nobody's going to hold you back. If it's within the terms and conditions, the bank is going to allow you, and they have no right to say no.
That's right.
But let's say you get a rainy day and you don't have that, what's going to happen?
This is it.
What about the folks that are a little sort of uncouth? We're talking about people that are, self-employed, this and that. What sort of situations should they look at? What sort of, pre-approval or preparation they should have?
Yep, definitely. So usually when it comes to self-employed folk, we always want to see a 2-year history of what it is that they do, whether they're contracting, whether they're doctors, dentists, it doesn't matter what it is. 2-year history at a minimum. That's for traditional lending. With B lending, we have some wiggle room. Sometimes 1 year is just fine. It depends on what they do and the industry and so on. It's usually T1s, notice of assessments for tax documentation, and usually bank statements. So 3 to 6 month bank statements just to see those income deposits.
Yeah.
We get into situations, most recently I'm thinking of one that I'm working with right now, who he's self-employed, only 1 year, and he has a rental property. But the rental property, he just collects a bunch of cash. And there's no consistency as to, he might receive $1,500 a month, but, $500 at the beginning, $1,000 in the middle of the month, and there's no consistency there. That is really tough to work with.
Yeah.
Because the banks are going to look at those income deposits, and because it's cash or just random transfers, they don't know what the rent is, especially if you don't have an up-to-date lease agreement. So some lenders are more flexible in that they'll say, okay, well, let's use market rent. So the appraiser comes in and says, I think this is going to go for $2,000 a month. Great, we can use that number. But that's not every lender. So it really is case specific. But for self-employed folk, the situation that I'm seeing a little more than before is in regards to taxes and debts in general. I've spoken to numerous accountants and so on, and it seems that just from a CRA standpoint, some of them are getting into arrears with CRA, and so that hurts them in terms of purchasing a property. You want to make sure that CRA is paid off before you buy a property.
Always pay the government.
Always pay the government, no matter how much it is.
And they're always in your pocket.
Always.
You'll be there working your ass off for 2 weeks, and then guess what? Payday hits, they're in your pocket already.
Definitely. They're the first ones before you. So there are some lenders that are open to pay off CRA to purchase. those would be B lenders. A lenders always want to see a CRA paid off. So especially for self-employed folk, those are huge, huge points.
So a couple of things on the pre-approval process. A lot of folks are like, okay, I'm going to go to the bank is going to pull a credit check, doing all of that stuff. Would you prefer if someone brings their credit check with them from like something like Equifax or TransUnion, or would you prefer you pull it yourself?
I pull it myself, 100%. Because what ends up happening is, and this is just a very weird situation, but if a person pulls their own Equifax, and they can do that free for 1 year. They could just ask Equifax for their credit bureau. That score is different than the one I pull. And I don't know why exactly the intricacy is behind that, but it'll kind of give them a rough estimate as to what it is. But when I pull their bureaus, it's more accurate as to what the lender will use. So whatever they give me, whether that's through Equifax or another third party or whatever it is, it's irrelevant. I'm going to have to pull my own credit bureaus because that's the data that I use.
How far off do you think normally, like just as a guesstimate? It doesn't have to be
exact. My God. So if they were to go through Equifax directly, it should be somewhat similar, probably plus or minus, I'd say maybe, I couldn't even tell you, 20 points, 30 points, 50 points, somewhere around that.
That could make a difference between full approval, no approve.
Well, that's it. Exactly.
Like if someone is pulling out that's like 680 and then you do it and it's like 640, like that's a massive.
It's a huge difference.
Massive difference. Yeah,
correct. And that's the difference between using a cosigner and not.
Yeah.
So
yeah. Because at that point, like most banks will not do anything with you if you're below 680.
That's right. At least for an insured purchase. So if you're using CMHC and the default insurers, no.
With that being said, again, going back to pulling your own credit or you pulling the credit. Why is it more advantageous for people to go through a mortgage broker versus a banker?
So in specifically for credit or just the process?
Lay it down on me.
Okay. So a mortgage broker always has way more selection than just the bank branch. Okay. So we have over 20 different lenders, and we have access to lenders that are flexible depending on the situation. The clients never have to pay us to find them clients when we're using traditional lending. So it's one of those things where the bankers are in a box versus us where you play in the gray space. I guess that's the best way to put it.
So if you don't fit in that box,
we'll find a box. But
let's just say your arm is a little stretched out. Sorry, you can't be in this box. We're going to go with some other box.
And very likely, the person that you're speaking to at the bank branch won't be there in 6 months. Versus myself, this is my business. I do everything mortgages, and I'm not leaving anytime soon. So it's one of those, getting back to what you said, it's kind of a relationship that I build with my clients. It's not transactional. I always reach out to my clients several times throughout the year just to keep in touch to see what's going on. If they need anything, I'm here for them. And more likely than not, that's where my rate insurance program comes into play. And what that is basically I'm constantly working in the background with all my clients to ensure that they're getting the best possible rate. We have a variety of different lenders that offer a variety of different promotions at any given point. So I'm working on the background to make sure that if I'm running some numbers and it makes sense to switch from one lender to another, even halfway through a term, that it makes sense financially to do, I present that to the client, and then they make a decision that, yeah, let's switch over. We're saving $1,000 a month. Why not?
Exactly. And then that's the thing. Like, I find it very hard for people to switch banks after a certain time, right? Like, but you shouldn't hesitate when it comes to the mortgage if it makes sense for you financially, because at the end of the day, they're just going to pull out the payment regardless of which bank you use.
That's right. Exactly.
So it doesn't matter.
It doesn't matter.
But another point that I wanted to ask you there, why is it more advantageous to deal with you versus the banks on the credit check side of things?
On the credit check side of things, it's, well, again, getting back to the lender that we're using, it depends on what the credit bureau pulls. So depending on what the debts come out as, depending on the intricacies within the credit bureau, sometimes there are lenders that are a little more flexible in realizing certain aspects of the credit bureau versus others. So,
and I guess you also don't have to pull it like so many times.
We don't have to pull it so many times.
Yeah.
That's exactly it. So we pull it once, and if one lender doesn't give us the answer we're looking for, we go to the next lender and the next lender, and it's...
And how many lenders do you deal with?
Over 20.
Wow.
Over 20. So, I mean... we have plenty of choice.
And the chances are you're definitely going to find somebody, unless your credit is completely screwed. The income is not there, then it's a different story.
I tell my clients, we will find financing. It's just a matter of what segment of financing you fall on.
Yeah, like it could be A, B, possibly a C, which
Correct.
is not really most advantageous, but you're still going to pay for it. At the end of the day, it's going to cost you.
This is it.
And where it's going to cost you is based on your credit and your income.
Yeah. And
Makes
also
sense.
down payment too. Down payment plays a factor.
With that being said, Eric, I wanted to ask you one last question.
Yeah, please.
If you walk out here today and you just remember something, go, I should have said that on the show, what would it be?
Oh my God.
If this was a first date, it's going really well.
Where are the candles? What would it be? Well, it would be, I guess, if anyone was looking to seriously dive deep into their finances and they were really looking to kind of optimize their current situation, regardless if they have multiple rentals or they're just, they have their one condo or whatever it is, reach out. Reach out to you. Reach out to me. Let's figure out the way to better your financial life, because a lot of what we're seeing right now is it's not looking too good for Canada. There's a lot of things in the funnel. Rates might decrease, but it just doesn't look good from an overall economic picture.
We still have issues with a lot of supply is not there.
That's right.
We still have issues with immigration coming in. So the supply is going to get a lot less.
Yes.
And it's going to dwindle. And with that being said, with all the inflation and the prices going up, also prices of homes are going up.
Yeah.
Whether we like it or not. It might sound like it's okay now, but at some point when the rates come down, it'll shoot
stir
up
back
on the other
up.
side.
Yep, 100%.
100%. Eric, thank you so much, man.
My
Really,
pleasure.
really
Thanks for
appreciate
having
it.
me.
One thing that I really appreciate about Eric, working with him, is not just the mortgages background; it's also that financial background. So it's not about just setting up the mortgage. It's not just about okay, well, we're gonna deal with this rental, that rental. It's being able to kind of give a full profile photo and say, you know what, maybe consolidating, selling that property and then selling that other property and then buying a multi-unit is probably a much better option for you. That kind of situation, I don't see it from any other mortgage broker. It's one of the reasons why I've been dealing with him for the last couple of years. And I don't cheat. I refuse to cheat. So,
He's monogamous.
thank you so much, man. Really
My
appreciate
pleasure.
it.
Thanks for having me.
If you guys like what you see, please don't forget to hit that like button. Give us a thumbs up so we can do more of these. And subscribe so you can get all the alerts. And every time we release one of those new episodes, you're able to see it. And we're going to have a lot more people like Eric here on the show. Really appreciate it. One last thing, Eric, before I let the audience go. What do you think of Ottawa? Is it boring or not?
Not boring. Not
Thank
boring
you.
at all.
Every time I bring that up, everybody's like, no, it's not boring. Thank you.
Yeah,
Really appreciate it.
Absolutely.
Ottawa is one of the best cities to live in.
Correct.
It's easy to raise kids. It's
Yes.
fantastic to get anywhere. And you know what? Traffic is not like Toronto. It's not like Vancouver.
What traffic?
Prices. What traffic? Exactly. If you can manage your day, you can get out anytime. Again, thanks, folks. Really appreciate it. Have a great day.